Hello, Warriors. Well, we made it. Okay, so we have a little bit of a regime change. Hello, AJ, Mike, Bran. I hope I helped. Sinatra, don't worry about your spelling here, buddy. Hi, Ryan, James. Welcome back, K-Man. Hi, Paul, Laura, Marcus. Welcome to Face. All right. Okay, I want to start off with a little bit of a tutorial here. Bonds have broken out, and I want to talk about how you guys can trade a falling wedge with a throwover next time. This pattern appears rising wedges, falling wedges, and you would trade them all the same. So let's first go to the daily. So here was a throwover. Okay. You wait until you have a close back inside of the wedge. Okay. So this was the first day it happened. Okay. Here's your daily. So that's your signal. You're back in the wedge. Your next trade is looking for a breakout of the wedge. Okay. So we might be getting a breakout signal here too, but you have to be patient. There were a few, intraday trades above it, but even this day, okay, there was your sign, but it didn't do it. So yeah, if you want to anticipate it, you're getting long down here, but this was your pure signal. So you just wait for the market to get back inside a formation after throwovers, and that's your green light. That's your go signal. If we do get this breakout in the bonds, 92, there's pretty good potential for us to have at least this, okay? And that would take us up to about 104, 105. But some of the Super Bulls are looking for, 120 in bonds. That would be, what, a recession's on the way, even though could be bullish financial assets. It's not a great sign about economic strength. Williams is pushing back a bit. He says he welcomes the data, but he's trying to talk markets down from their enthusiasm a bit, that it doesn't exactly have him pushing for rate cuts. So that's your lesson in how to trade wedge formations and throwovers. You just have to be patient and wait for it to get back inside the formation. Everyone got it? Take a screenshot of it. Here's a 4 hour. It's a little more detailed for you.
Hey, thanks for the
Okay.
lesson, Coach. That's great. It's really,
Yeah.
really great information there.
Yeah. So, people, wedges happen all the time.
Yeah.
How do I draw it? With my imagination. So, you're going to have to use your own imagination to draw your wedge lines. People always have their lines a little different. They're anchoring against different points. I really can't tell you how I do it. I just see it and do it. And it's probably from doing it for 100 years. Okay. So the more the more you do technical analysis, the better the technician you become. And I'll tell you what, it still surprises me that technical analysis works when I look for an area and you get a reaction from that area. It's still, amazing how you could draw a line and then see something happen. That means we're not the only ones doing it, right?
It's behavioral, right?
Yeah.
I was just
Yeah,
having
there
this
you go.
conversation with Bran regarding the Bitcoin move and respecting the 618 retracement. I'm like,
Yeah.
that's because algos haven't really effed up that market yet. I mean, it's all everything that you see in technical analysis, especially Fibonacci, is why I love them so much.
Yeah.
Is that it is very much a behavioral, natural response in the markets based on price and rhythm that it would be in anything else that you'd find in nature. So,
Yeah.
that's one of the reasons why technical analysis is so great, because price action is really just a visual response of human behavior. So
Yes, yes. And anything that appears in nature, I believe whoever, whatever created the universe was a mathematician because you have all the cycles, you have natural numbers, you have golden numbers, so
yeah,
numbers.
I love
So
nature.
yeah,
Yeah. Yeah,
so
just don't
uh,
if the snow is yellow, don't eat it.
oh yeah, or
Sorry.
poop in the woods. So I also I want to welcome back K-Man, who if you followed him and Stell, you were a buyer in silver here,
Yes, sir.
2620.
Good morning, sir.
2620. So you had a good year this month in silver.
I had a decent run. I actually took another slice off today, 29.65 ahead of the Roaring Kitty 30 level. I looked at silver this morning in the longer end as well, the longer term in the weeklies, and there's a very interesting level at 30 and a half. So combine that with those highs that we had. So if you take the whole move from where was that?
Here, from here
Um,
to here, and then
right,
measure it.
let me find it back on my picture where that all started.
22 to 26 is 4. Tack on 4 gives you 30.
Yeah, that
Um,
is one. But then if you look
yeah,
at the whole move from 2011 down to 2020, the 50% is 30 and a half. And I think it's not a complete coincidence that we stopped since 2020 3 times just in front of 30. So 30 and a half is going to be my next big level. If that goes, then I think we're off to the races for another leg. But
okay.
before, we have to respect it.
Yeah, I know people talking 60.
It's
Um,
possible.
and yeah, uh, I wanted to
But
also cover I also wanted to cover this was important closing under 105 in the Dixie. So, there is some support here down around 103.80, but now I think you can sell any rip, even in here, and risk closes maybe back over 530, 540, and a close back over 105. So, I welcome any bounce here to sell into. Canada really held up the best. I mean, it actually doesn't look bad compared to what the dollar did. It held up pretty good. And, I think you just have to buy dips.
Dale, a few of us bought that 130.36 yesterday. I picked it up at 136 and I just sold it this morning. So on that dollar cat, that's just such a key level that's been defended. We've talked about it on so many occasions over the last several months. So, if we talk about it multiple times over the course of several months, you're going to get a reaction from there, or there's a
Yeah.
really high probability of that, right?
Yeah. I mean, we could, maybe it's got legs to stretch to this confluence up here at 670.
Oh, I think it does. I mean, if we have some decent US data today, I mean, why shouldn't we? Why
Yeah.
why shouldn't we bounce back, especially after the sell-off this last week?
Yeah. So,
I'm a bit worried we keep knocking on the door though, and the bounce is looking a bit weak.
Dixie
Ryan
108
always makes
is,
that point. If you
uh,
knock enough on the door, it's going to open, right?
yeah.
Yeah.
All right. Well, you know what, Shiva, if that's happening, I need a little more evidence. Closing back over 105 would be my first sign for a move to 108. So you're looking for some type of event because it's not going to be yields that are going to drive the dollar up to 108 that I think. So what do you think it's going to be? Some type of exogenous event? You're here, you got the spotlight. What do you think? What could drive the dollar to 108? I'll ask Ryan. Can you come up with a narrative for 108?
Yeah, inflation getting back over 4%.
Okay. All right. So that would probably at least take till uh return. Okay. he didn't answer it. That's going to take at least a month before we get the numbers again, right?
Yeah, but even
Yeah.
108's a bit of a stretch. We couldn't do better than what, 106.50 was it?
Yeah,
On
it was
the
a double
high side.
top. This
Yeah,
screwed me up because we didn't take out the stops up here.
yeah.
So
So
I
108, I think, is going
yeah,
to be something huge to get us up there. If we couldn't do 106 and a half properly and hold it over
yeah.
everything we've just come through, 108 is going to be a bit of a stretch.
Okay. All right. So, here's the 105 level. 103.80 is another big level. But, I'll take the other side of the coin and say that we're going to take out 100 before year end and trade at 92. So that's my view on the dollar. What do you think, Ryan? You into buying break modes like in cable, maybe back to 26 or something? You buy a dip, or euro back to around
I'm still
820.
long. I'm still
Yeah,
long from
you've been
the
long. How
BOE
long? I mean, let's show people what it's like to be a pro with patience. How long have you been long the euro?
since the BOE last week at 124.59.
Okay, BOE.
Which,
All right.
that was the magic level that we couldn't
Because
break
you were
below.
buying it back, you were buying euro way back here. I
Oh,
remember.
105. I was last long euro
Yeah,
and adding bits and bobs, but I got trailered out on that one. But I'd already run it up to 110s in that from that first move from 105. But you talk about lines and you putting lines on your chart. I put a post up in the chat room yesterday, just a really clean look at cable, and I said we're in a range 123, 127, and we tapped it on the head, 127, and that's inside a 120, 130 range. So you
okay.
don't need 100 lines. Like you
Yeah,
say, you have your big lines, your big ranges.
yeah,
Now we've got to see some of these pairs, add to that. We've had a decent move. There's that move.
yeah,
We've done 250 pips in cable since
yeah.
Thursday.
We alerted everyone on the BOE.
Yeah,
It was very close to 61.8 back. It didn't quite get there, but then we said, we don't think it's going to get there. It doesn't have to get there. So that was a pretty good day to buy, even if you bought the high of the day on the close. So,
yeah.
um,
To be honest, I
there,
wasn't expecting to get 250 pips out of it, but not
yeah,
going to complain. But
yeah,
now I'm concerned. We've done 250 pips. It's what's it going to take to go more? If we get bad data today and it's mildly bad US data, that 127 is going to be important. If we break it, fine, we're probably off and running again. But if we test it and don't, that's going to tell me we've run as far as we're going to run for the moment. So the price action today on what happens on this data is probably more important than CPI yesterday.
So if Canada has more upside, does Aussie have more downside? Because I believe that Blake, you'll probably show Kiwi breaking out yesterday, right? You were talking about that a couple of days ago.
So the question is going to be, can we hold these if we see some dollar strength today, can they hold their breakout points? I got out of all my dollar shorts yesterday. Yeah, I mean,
Yeah,
how could you not? I mean, it was like
windfall.
yeah, I mean, it was over the last 2 days. It's like, okay, well, enough's enough, and we'll see if we
Yeah,
can build on it now. So
yeah.
there's a lot of
2 days.
key levels that rejected overnight, and that's
Okay.
the important thing.
All right, so we're going to see that now, and that's another. Okay. Let me coach you about a pro. When you have news working for you 2 days in a row, it's not a time to enter the trade. It's a time to take windfall. When the news
Amen.
works is in my favor, I'm, skeptical that it's going to, continue. And when it's in your favor 2 days in a row, that's a windfall.
Yeah,
Amen.
Yeah. Anyway,
agreed. So can I
yeah,
show you
go
guys
ahead.
a couple of key levels that have really just kind of held, and then we can get some comments here about you guys' thoughts going into today. So let's
Go ahead,
do that
buddy.
really fast, because I think it's all very, very important. Because if you look at the euro dollar last night, we wrote that the bull flag pattern completed at 108.98, and it's also 78% retracement in the euro. So yesterday you should have been aware that we have now completed a pattern. Now, completing a pattern doesn't automatically mean sell, but completing a pattern, if you have, if you've been running like we have, like long US euro dollars or short dollars, it's time to take some profits off the table. I actually closed out everything, but that's a real big indication that it's like, okay, the move is now done. Are we going to be able to expand on that? The reason why we'd be able to expand on that is probably going to come next week. I mean, because if you think about the euro, we see PMIs next week from the Eurozone, from the US, also the UK. That's where we're going to get a feeling or a sense if we're seeing that trajectory of Eurozone growth stabilizing and the US continuing the weekend is going to come next week. So there's a lot of time between now and next week to really ponder if this level is breakable or if we're gonna expand on it or not. So I think that's key. Plus, we have weekly unemployment claims, which we got a really nasty response last week, but we don't even know if last week's unemployment claims was a one-off. Remember, I mean, Ryan, how big was the miss last week? We created
19K. Nothing.
19,000.
Nothing.
Not a huge. Here, let me pull up the data so everybody can see. Yeah, and I mean, we're supposed to revert back this week, right? So if you look at all the data, right? This is where the 231,000, you have to go back like literally like weeks and weeks and weeks worth of data. If you or excuse me, months and months worth of data, you can see the last time we were up at 230,000 jobs created, or unemployment claims created. But if we revert back to 219, then you're going to see the dollar bounce back. And so, if you're sitting here, short the euro, I mean, the euro could be literally trading down at 108 by the end of today, following today's data. So just keep that in mind. Then I want to show you guys a couple other things, so if you go look at the you go look at the Aussie dollar, and this is just what we pointed out just a moment ago. Now I need to find the Aussie. There it is. So you can see this really key level of resistance hit. This is a daily trend line that goes all the way back to the COVID lockdowns. We basically are just around the 618. You notice, and Bran in our chat room, he just pointed out I was having this side conversation about the US dollar with Raphael from he's from one of the Nordic countries out in Europe. Anyway, we were just having a conversation with Bran, who's listening in right now, about the 618 retracement in sterling that also has held. And we've got a false breakout, and we're holding resistance too. This is another resistance level that we should probably be paying really close attention to. So, when you see all that develop, and Dale, and we talk about like the Kiwi still has some distance to go in this pennant. It does. We're well above the 200 DMA. Now we have to see if we can respect the breakouts, and that today could be a very, very solid test of that. Again, if weekly unemployment claims bounce back, the dollar is going to bounce back. Will they hold? Now the flip side would be, let's say it wasn't a one-off. I just was reading some analysis about 30 minutes ago regarding the analysis, or excuse me, the weekly unemployment claims being one of potentially an addition from some New York jobless claims. And let's say it was a one-off. Great. If it wasn't, then you have to start looking at like the dollar yen that just got the absolute smackdown yesterday. We have some weak data today, and let's say we create, or let's say unemployment claims are around 230,000, maybe 240,000. The dollar yen is set up for another leg lower, and so would yields. So I think the market's set up today for either direction. You just have to be a little bit more careful. And Dale, I think your analysis is very succinct here. You know, you can't be adding on at this stage in the game after days of the dollar getting, mauled in the market. It's you can't just be adding to dollar shorts, especially coming into Asian trade when everything was hitting some pretty key levels. So anyway, I want to hear from you guys. Since K-Man, you've been gone this week, and I know you had some visitors in town. I'm sure that was awesome. But being away from the markets for the last couple of days, I know you always probably keep one eye on quotes. I do, even though if I have people in town or I'm on holiday or whatever. But taking a bigger view and being able to step back for a few days, how are you processing everything and what the dollar's done over the last couple of days?
Yeah, okay. So everything started actually with those claims last week, and let's say that they were a little on the weaker side, but I just think it was an excuse for a long dollar market, and then they got confirmation in small pieces here and there that things are looking a bit slow, and I would view the slew of data that we have today to kind of close that week of overall data that we had. So today, if you get a set of weekly data, and I would also not look besides the Philly Fed, let's say the employment index, the prices, the new orders and stuff. I think the Philly Fed could also have a bit of a say in today's data. But let's say that we don't have any weak data anymore. Then I think we are going to go. We are just going to continue to trade bigger ranges. If we get a set of weaker data, then it's probably a sign that those dogs who are chewing the short dollar bone will continue to chew the bone. That's how I see it. Where I may not completely agree is the yen. I found this bounce from the lows that we had overnight. It seems to me like the timing wise could have had something to do with the fixing as well in Japan, but that bounce, I don't really like it for stuff like yen. I still think that if you want to be short dollars, there's better dollars to do so. And I'm still thinking about the Kiwi, Aussie, probably stuff like that, maybe even the Kilo,
I think the dollar yen, as we get close to the 50 DMA and that 152 level, it's definitely a tougher short, right? I mean, especially with the
I really don't like the bounce that we saw since we did the low there overnight in Japan.
Pretty aggressive.
And if you look at what the yen crosses are doing as well, it also tells me that the yen is not ready to completely turn around yet. That's how it feels anyway. Looking
Hey,
at
K-Man, I know, like I said, you probably had one eye on the market, the other eye on, your visitors in town. I want to say, and I don't know if you noticed this, Ryan, you probably noticed this as well. Yields have been like the 10-year yield has been dropping like literally all week, and the dollar yen finally took notice yesterday. I mean, the disconnect was over the course of what I noticed was over the course of several days. So you can see
it caught the cold. The yen caught a cold yesterday.
Yeah. So like here, let me just I'll just show you guys on an hourly basis.
Ryan, I remember everything you say.
Thanks,
but you can see.
Remember when I lent you that tenner?
This is that disconnect right here. This was a pretty big one. Dollar yen was going up as yields were just kind of going sideways after, you can see yields have been dropping, and then the dollar yen didn't, so I don't know if you had any takeaways from that, K-Man.
Equity markets. I mean, equity markets going up is positive, is usually negative yen,
Yeah, that's true. Good point. All right. Well, Ryan, what are your thoughts on really the last 24 hours, and what should we be looking for today, and what are you looking at? What are you looking at, punk?
Sorry, mate.
I was just talking shit. I'm just being stupid at 5 a.m. Go ahead.
You talking to me?
You talking to me, punk? What are you looking at?
You're talking to me?
All right.
Yeah, there's a lot of eyeballs on this jobless claims, but it was the trigger last week. But I think everything that's happened with every data point since I don't know if it's going to be the standout data point. I mean, we've got jobs, we've got housing, we've got manufacturing via the Philly-Fed, we've got import, export prices, so we've got price data. So we've got a real smorgasbord of sectors we're going over. Yeah, look at jobless claims, then look at housing as well, see what that's doing. Philly-Fed, that's a minor number, so that's probably the last thing you want to look at. But also keep an eye on the price index data that's dropping as well. And again, it's going to be the reaction that's important more than what the data says. If it's mildly bad data and the dollar doesn't, or dollar pairs like euro, cable don't take out their recent highs, that's going to be a very, very clear signal to me that we've gone as far as we have in this phase. You know, it's a huge miss, then we probably continue. If the data's good, that's going to be interesting to see what happens to the dollar on rallies. Does it get stamped on pretty quickly?
You know, Ryan, you gave us a great heads up yesterday. You know, everyone is still talking about the CPI, but I notice, you know, I'm doing interviews when everything's happening a lot of the time. You know, after the number, I'm preoccupied for 30 minutes.
Right.
Yeah.
But I noticed that gold went negative. Silver actually was down 4 cents, and the dollar was rebounding. And wasn't it the retail sales that really lit the fuse for
Yeah.
dollar
I agree.
weakness? Huh?
Yeah.
And
Yeah.
that
was.
because we're getting a reaction, you know, fade the CPI news until retail sales, and then everything just exploded. So that was a real good heads up for people that, you know, were just counting on the CPI to be the market mover. It was actually
Thanks, mate.
retail sales.
And we whacked that 2400 pretty much, and it held.
Yeah. So
Yeah, and you know, I think it's really going to be important, especially as we go into this fall. I know we're just entering summer, but as we go into the remainder of this year, to see what happens with the U.S. economy and I mean the softness. We are in the middle of a soft patch in U.S. data, and that's undeniable. And so the question
it's very
is,
mild though. I mean, even that retail sales, it wasn't a collapse. You know, it's not
unchanged.
We're not talking recession next week.
Right. No, and I agree. I don't think it's like anything that should be alarming right now, but it is something that, you know, obviously is as it starts to soften, your radar has to be up, right? And I think that's the important point.
This is one of those moments where you need to listen to what the market's doing. It's saying any weak data, we're going to hammer it. Okay, you can't at the moment. You can't fight that because you haven't got big enough pockets to fight it. I haven't. You haven't. All of us together haven't. So listen to what the market's telling you, even if you don't agree with it. I don't agree with it. I think it's an overreaction, but I'm not going to fight it because I know when the market gets in this type of mood, you know, it can keep going for days.
Yeah, we can't ignore the fact that the equity markets are at all-time highs, guys. And gosh, I meant to ask. I meant to ask your opinion of this. Because I was talking to Chris Weston on the Trade-Off show last night about this. I believe that, and I saw a lot of people calling market tops. And by the way, Michael Brown, if you're listening in right now, just the world doesn't revolve around you, Michael Brown. There's a lot of other people out there. He was responding. It was a joke, but he was responding to me earlier like, I wasn't calling that, and I know that. But there's a lot of people.
I tried to sell I thought we'd have a failing rally.
But you weren't the only one, Dale. And I would venture to guess that out of all the people that I've been listening to, all the analysis that I've seen, all the people that have, you know, been trying, there's a majority of people. When I say majority, I'm talking like a large majority of people trying to call the top. And they just got run over yesterday. And I think a lot of it was a short squeeze. So with that being said, I think that, we need, shit, I keep grabbing the wrong thing here. Sorry, I'm trying to talk and do this at the same time. I think we have to watch equities here today and how they respond. I'm sorry, I'm gonna pull up over all of our data over here, but I want to hear from you guys. Do you have a guest today, Dale?
No.
Okay, great. So K-Man, Ryan, stick around. I want to talk to you guys about equities and what they have done. And Dale, obviously we'll have this discussion too. So stand by. Data is coming out in 15 seconds. And then I want to get everybody's opinion of equities because I think equities are up here from simply a squeeze. I don't think it's anything more than that, which is a warning, because if we dip back below the breakout point, then you got a false breakout and blah, 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 blah. But we'll talk about that here very momentarily. Here comes the data.
222 jobless claims in line. Continuing claims okay. Housing starts soft. Permits soft. Prices hot. There you go.
Yeah, and look, I mean, it's, you know, look at the stock market loves the data, loves
Week.
the soft data. I mean, you know, but not a big reaction. I'm not doing anything at the moment.
The dollar's
Almost wanted
coming
to
back.
sell the euro pop there, but I didn't do it. I didn't do anything. I haven't even touched the buttons. Let's continue to watch this and see what the reaction is here.
I think
Go
the
ahead.
price data might get the eyeballs, because the housing stuff, bit of a miss in housing starts, not huge.
Yeah.
Jobless claims, okay, back to normal. But that price data was a bit hot. Like the import prices expected to rise 0.4% year on year, came in 1.1%. That's import prices. That's inflation pressure.
Yeah. Okay. All right. All right. So, right here, that is pretty hot, and the dollar is actually, I think, taking cues from what Ryan's saying and bidding up on that. So, and you can see the dollar right here firming. Let's talk about equities really quick before we go. Ryan, how did you read the move to all-time highs yesterday? I thought it was just a gimme trade. I was like, CPI data was too CPI data was wasn't hot enough, and that was just a free invitation to squeeze shorts yesterday. That's all it was, and it was a very easy trade from a analysis point of view, and being able to ride it playing the dollar. I thought it was a very simple gimme trade. But the question is, do we extend further here in equities? What are your thoughts?
Yeah, well, that's the question. I mean, I tried a really small short up against the 82 highs yesterday, but even while I was in that trade, we were talking in the chat room, weren't we? I was saying this is looking like it might be going for a break, and 5 minutes later it did. But yeah, it was. I still think it's an overreaction for that data, but I'm not going to stand in the way. We know where the level is now, 52.80, that break point. If we dip to that and hold it, off we go again.
Yeah. Hey, real quick, and I know, hey man, I'm coming to you right now. Benedict, which by the way, Benedict, you are on what do we call it?
Jumbotron.
Jumbotron. Thank you very much, K-Man. Appreciate it. You're on Jumbotron. He just said, and Benedict, I met him in person after knowing him for about a decade in our chat rooms, and even before we had ForexAnalytix, he was in my chat room previous. Met him in South Carolina last summer. He just reported that the cup and handle pattern did complete in the Aussie overnight. That's something else. Thank you very much for your analysis, Benedict, in the chat room.
Some smart guys in there, man.
Lots of good traders in here. Anyway, just wanted to point that out. K-Man, what are your thoughts about equities? I know you've been watching from afar a little bit, but what are your thoughts here?
Well, as I've been saying for a very long time, money has to be put to work, and we're seeing like slightly softish data, yields coming off. Money goes into flows a bit into bonds, back into equities, but it's a global phenomenon. You look at the European equities; they are the same thing. I think it's just like the real money is having to put their money to work, and that's it. And yeah, unfortunately, when you read retail positions by brokers and stuff, they're always short because they always counter trade what the market is doing for real. And yeah, the people getting a bit squeezed out on the back of it. For what I think about what is to happen now, if we continue to see a very gentle soft patch, like today's numbers could actually be put into that basket as well. You see a slightly weaker housing starts, but you're still comfortably above 1.25 million. You see building permits not even far away. But then you see the Philly Fed manufacturing, which is a minor data point, but coming in a bit weak, but above the 0 point. The employment index there is still soft though, but it's Philly, yeah. So it's not your biggest data point. I still think for real money they're just very I'm not going to say relaxed, but when the stock market goes up, they have to put money there. You know, if you look at the overall picture on the results, the earnings there's been overreactions or big reactions on some of the individual stocks, but you look at it overall, it's not really a bad picture yet. So we're still full whack in softish landish territory, you know, and in that kind of environment, you will see the stock markets doing relatively well. We need, and I think, I mean, as I've been saying, Q2 is going to be the messy quarter, and then hopefully Q3 we see a lot clearer. We're still in there for as far as F.A.C.E is concerned. I still think we are in that messy second quarter where we trade big ranges. Looks as if the dollar is going to fall out of bed one day, but it doesn't, because the positions have been rebalanced. Looks like it's going to fly away the other day, but it doesn't, because everybody is already in the position, you know. And that's typical for those quarters where we don't know. We are coming into a period where central banks are going to have to make decisions, but they haven't made the decision yet. Although ECB, if they don't hike in June, I don't know what those ECB people are still doing there. Sorry, cut in June.
Yeah.
But we still, for me, in that bit of a messy quarter, and then you see, but the soft landing picture is still there. So you see risk is doing okay. That's why I think as well that emerging markets are still enjoying the ride to a certain extent. Yeah, I mean, dollar mix is bouncing back from levels, but you know, I mean, the Mexican peso and the Canadian dollar is a bit bizarre because they have such a big magnetic field of the US, you know. So the neighbors, that is their biggest trading partner. So I always have a trouble to trade dollar mix as such. I prefer to trade crosses, but yeah, I mean, it's all these big baskets still, one big basket trade, and for the time being, no big downside, you know. So that's my overall feeling right now. And in that respect, I still like to be rather short the low yielders versus the high yield, long the high yielders, and that's it. And
all right. Well, Dale, before we go, what are your thoughts here on equities where we currently stand? Was yesterday a sustained rally, or was it just a squeeze?
I think there's more upside. This, for guys looking for a top, this is what I'm looking for. I'm going to be, because I think yields are going to continue to drop more than people are expecting. I think the dollar is you know, entering a bear market. So I'll be looking for days when, not just one day, but a period of time when you have dollar weakness and rates declining and the market isn't responding to that. So that'll be the type of intermarket action that will give me a tell that we're running out of mo, when what should be a tailwind isn't helping anymore. But I think it's going to help for a while. I mean, it's hard to be short anything if the dollar's bad.
Right. Yeah, that's true. And hey, real quick, I want to point out, because we discussed, you know, some really critical levels in these currencies. So you know, here's the Aussie. I just want to show you guys this. If you didn't see the ForexAnalytix tweet, this is a, you know, since COVID, we're up against channel resistance. That the blue line that you see at the very tip there, that's if the flag actually completes. We haven't completed yet. So you look at the Aussie, we're really just, you know, knocking our head up against major resistance right now. And you know, the Euro's in the middle of a triangle. I don't think we can really argue other than the fact that we're in the apex of this freaking triangle, which means it could whip back and forth 200 pips and not even, think twice about it. Kiwi, is still in a descending channel, despite its relative outperformance. And as K-Man pointed out, the dollar yen's still damn strong. It's still holding up really well. And if you look at the dollar is it's caught a bid today, and that's a warning at the moment. So we'll be watching equities. I think you gotta be looking at the previous high in the S&P, which is basically 52.85, roughly 52.84. If you're looking at the ESs, we'll see when the market reopens. Once the actual contracts starts trading today.
One
around the
stock,
50.
yeah,
Go
one
ahead.
stock, Blake, that is not participating and normally would is Amazon. There was real nice divergence, and Amazon barely closed. Well, it was still down $1 yesterday, even with that melt up. So I see two drives. Amazon's an early tell for me sometime. And you know what? I don't think it's going to be a quiet summer. Maybe August is like it usually is every year.
Yeah.
But it's hard for me to believe that it's going to be a quiet summer with we're only 6 months away, less than 6 months away from what may be the most chaotic political and U.S. election in the history of our country.
Yeah.
And,
Yeah.
6 months flies by, bro.
It does.
So,
Days are
I don't,
long, years are
yeah,
short.
I like that. So, I think it's important that people get in our community and they have a good summer. And I hope so far, I know K-Man is and Ryan are making May pay. So there's still a half a month left in May. So,
As Dale says, make May pay, and jump in
yeah,
our community. Our community is it's real, it's very rambunctious.
you're not going to find a better one.
Yeah.
Because I know I'm around. I talk to a lot of people. I see a lot of stuff. Go shopping. Let me know if you find more, technical, fundamental talent in one place.
Yeah, it's not just our team members that you hear here. It's the people inside of the community that make the community. So
they care about you too.
Yeah.
Which you're not just a number.
For sure.
Anyway, that's my pitch today. I'm a believer. So, everyone have a great day. You're probably exhausted from the last couple of days. You don't have to trade every day. And, we'd like you to learn from us and come in, and I'm sure we can learn from everybody. Maybe you have some things you could teach us as well. So don't just count your pips, count your blessings, and be part of something bigger than yourself. And
thanks, Coach.
Thank you, team. Thank you, team. K-Man, always great to have you back. And Ryan, and there's a news flash going out. I'm actually going to take a vacation. So you guys that have been here at F.A.C.E,
What?
know that's like, that's going to be headline news on Reuters. Dale taking a vacation. So I'll be out next week. And see you guys after Memorial Day, which happens to be my birthday.
Oh my God, it's going to fall apart, Dale. It's going to fall apart.
I'm going to be, still feel pretty good for 85. But anyway, we have a great team, and Blake's going to step in and do all the interviews. He's gotten very good at it, and you guys won't miss a beat. So have a
well
great
deserved
day.
And well needed. All right. Thanks, Coach.
It's only been about, I don't know, 10, 20 years. All right, guys. So thanks again, Kay, Ryan, Blake, and all of you out there. Thanks for hanging out with us again today. All right.
Thanks, Coach.
Adios.
Cheers,
Thanks,
Coach.
Blake. Bye-bye.